My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, chances are if you've been tuning into the podcast, you've heard about all kinds of different investment classes, especially when it comes to real estate investing. Well, today our special guest is Patrick Grimes. He is zooming in from Hawaii. He's the brains behind passiveinvestingmastery.com. And Patrick's going to talk to us about some alternatives, non-correlated alternatives. So Patrick, welcome to the show. Great to have you.
I'm glad to be here, Dave. Appreciate you having me.
Okay, give us a little snapshot of what investing means to you, because it's more than just real estate.
Yeah, well, I was a high-tech automation and robotics engineer when I
one of those smart guys. Got it?
Well, yeah, I was a geek. I still am a geek, but and I was working with some really amazing people who, in some of the highest, excelling companies out there, Facebook, Lockheed, Raytheon, Tesla. None of us had any idea how to invest outside of our IRA, 401k, a couple startups, maybe some Bitcoin fringe stuff. But really, I lost everything in 2009 and 10 when I did my first real estate deal. And I realized, man, I was riding waves of high tech valuations and the market and I was trying to diversify. I rode waves of real estate. And I started realizing, how are you supposed to do this and actually sustain wealth over time? And I over the years, I started doing better. I got a master's in engineering and an MBA, and I started following the breadcrumbs of the wealthy and learning that they don't just invest in all-in-one or all-in-two. They choose allocations. They strategize where to invest based on how those individual investments don't rise and fall together, how they're what we call non-correlated. They have different market fundamentals. And so that's why our platform teaches all about non-correlated alternatives, those lesser known things to invest in, even outside of real estate, that kind of have that recession resilience and non-correlation, and the Venn diagram in the middle. That's our sweet spot.
Cool. Well, you got my curiosity up. So what are some examples of some non-correlated investment opportunities or asset classes that you guys like?
Yeah, well, let's start with just some examples of really well-known non-correlation,
Sure.
the stock market and real estate. They don't tend to come up and down, right? The gold tends to be in kind of counter-correlated, inversely correlated to the dollar. When the dollar's high, gold's not so good. When the dollar, like today, gold's really high, right? Mm-hmm. Something that's non-correlated to the stock market real estate is oil and gas. It's a commodity. They tend to rise and fall in its own cycle. But turns out gold and oil and gas, both what they call safe havens, tends to be correlated, and statistically about 80% of the time. So you got to think, when you think about allocation strategies, what goes up and what comes down. You don't want it all to go up and come down at the same time. The lesser known things that don't quite ride these dramatic volatility. And what I'm going to tell you isn't a surprise to anybody. I'm just maybe framing a little bit different. But what are these industries that are in need, even in good times and in bad times? And some of those are the healthcare industry. Healthcare, they need help, right? In good times and bad times. Education. People need skilling and upskilling in good times and bad times. Also, the legal industry. That's one I particularly am fond of. Those attorneys.
You're one of the few.
I'm fond of investing in the industry. I've heard the same thing about CPA firms, which also tend to be non-correlated to broader markets. They're needed regardless. Attorneys, they get really busy in good times, and when people get litigious in bad times, they're really busy, right? And if you look at the data, you can see real estate, oil and gas, and gold all go for wild rides. And you can see healthcare, you can see legal industry, you can see CPA firms. They're just straight as an arrow. Very little affects these. And some of those industries are, you don't necessarily want to be friends with, if you're not a lawyer, all lawyers are all CPAs. It's a little quirky, but HVAC people also similar. But figuring out how to invest in those industries is a way to build resilience in your portfolio, even in downturns. And so that's the challenge. And it's already being done by but more sophisticated groups like hedge funds and sovereign funds and private equity, family offices. If you look at our slide decks, we show allocation strategies. And these individuals that are about measurable returns and long-term sustainable growth, they're making allocations into some of these other assets. It's just not well known to everyday Joe. Nobody knows about this stuff because there's no guru out there. Become your own legal investor.
Then let's kind of unwrap this for a second, Patrick. So if somebody's going, okay, that kind of makes sense. How do I invest in the legal industry? It doesn't seem like that's something that's listed on the stock market or something like that. So how do I actually invest in that kind of an industry or accounting? Do I go buy stocks in KPMG? What does that actually look like?
Well, we would never, although they're all of those things you listed there are ways you can invest in the stock market within those industries. But the stock market is investing in paper that's sentiment driven, and the stocks all ride those waves of the market. So we would say, no, you've got to figure out a way to invest directly. And when you do so, you need to solve a need in those industries. Like we have a debt fund, and we're lending to real estate operators. We're helping them buy properties and improve properties to give housing to tenants. Well, what about the legal industry, man? I really want to invest there. How are you going to solve a problem? Well, turns out there's a lot of attorneys that need funding. They need financing. And they need financing because maybe they're oftentimes working on a contingency fee basis. And they need money to find these clients that need help. And they need money, operating expenses to pay for their costs to get them to a settlement so that they can provide access to justice for those that otherwise wouldn't afford it.
Got it. So when somebody sues McDonald's for $85 million for dropping off coffee on their lap, and the lawyer takes that up, it's going to take years to go through the courts, and you guys are offering a way to finance that lawyer for all their time, trouble, and effort in the meantime until they get that multi-million-dollar settlement, give a big chunk to the client, keep a big chunk for themselves, and pay you guys off. That big broad strokes, that's kind of what we're talking about there.
Essentially, but I will say we don't do the frivolous lawsuit crap or, this type of ambulance chaser stuff. We're really not. And we have this, profit and purpose, in our litigation portfolio. In a similar way, what we're like more so is like water contamination, where the government fed at Camp Lejeune 17 years contaminated water. And now they're providing settlements to soldiers and civilians that lived on this base where Marines trained to go to war. And well, we're got about 2,000 individuals collateralized in our fund where we're supporting the attorneys, helping to get those really meaningful, like $100,000, $400,000+ settlements to help these people who have medical records showing their injury and proof of exposure. So some ones like that, there's a lot of them out there. There's infant baby formula that's causing major problems. And through discovery, they realized that they knew there were issues. And Roundup and Paraquat are farmers and landscapers suffering because Monsanto falsified reports. And those have since been pulled back by the EPA. And we can help those people get access. So it's not a class action where you get like $50. It's not frivolous. It's actually meaningful and impactful, and service to the attorneys, and it's a service to the harmed, and it's a service to our investors.
Interesting. Okay, now it's making a lot more sense. Same idea then, basically speaking, if you're funding accounting firms, same kind of idea. You're providing loans to them for business growth, that sort of thing.
So you can access any industry in a lot of different ways, right? What you asked me is what we're specifically doing in the litigation space. A lot of this, and with attorneys, you cannot partner with them, so they can't go get that would affect the attorney-client privilege. So they kind of have to go to boutique shops and get financing. CPA firms are a bit different. My friends that are investing in those are doing a combination of things. They're buying brick and mortar shops. Like you said, they're also just becoming in debt, or they're acquiring virtual CPA firms right now and putting AI in place, or they're acquiring these virtual firms right now and then rolling them up because there's strong cash flow. So if you find a bunch of later retiring CPAs, they're buying like 20 of them and then selling it to private equity. There's a lot of different ways.
Interesting.
That you can access that space.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Well, this is really kind of interesting, Patrick. So we've talked about the legal field. We've talked about, CPAs. What other things are you guys looking at as well as non-correlated options?
So I'm really big, and we don't offer, you're going to see this outfacing on our website yet, but we're really big in the medical space. I personally, and one way to access the medical space where you can get returns that are the fundamentals of those returns that drive those returns are rooted in the healthcare industry. And that's really what you care about. When I was doing automation and robotics for healthcare companies, they did so much better in downturns than the high-tech ones, right? So the .coms. So medical receivables, durable equipment, medical equipment leasebacks, the types of financial instruments that allow for health insurance settlements, those kinds of things that provide for the ability to get returns that have very strong payers, but the providers just would like to get the financing early, or the equipment distributors need to get the funds now. Or in accounts receivable, it's typically, doctors' offices that are just not staffed in a way to be able to have a whole team of people fighting the insurance companies to get them to pay right away. And so it ends up taking them years because they slow play it and their insurance covers it, but they can then take quite a bit of that and get it now. And so there's a huge space right now of healthcare, receivables, equipment leasebacks, durable equipment, that kind of stuff. Or there's medical practice. Medical practice in some markets, people will purchase those and roll them up, or purchase those, aggregate it in a strong cash flow play.
Interesting. Very cool. Where, if anywhere, does real estate come into play for you guys?
Oh, so I'm a real estate guy. I've been doing real estate. My first deal was back in 2007 and 8, and I lost everything in 9 and 10, free development. So, and I did single family myself while I was moonlighting it, being an engineer, and then I traded to apartment buildings, and so I'm partner in a couple thousand apartment buildings. And now we have a really unique time in commercial real estate. That commercial real estate is undergoing a huge downturn, just like we saw residential real estate in 2009 and 10. We're having like a lifetime event right now in commercial real estate. But a myriad of factors, we can talk about why, but you can lend really high because the banks are on the sidelines for great properties, and you can buy really low. Mm-hmm. So we have two sister funds, an income fund, which is a real estate asset-backed debt fund. It's a pool of loans. We have an acquisitions fund where we're buying cash. And so those sister funds allow for the opportunity for people to take advantage of the upside of the downturn. They're
like that, the upside of the downturn.
Yeah.
Yeah. Interesting. Fantastic, Patrick. I know that you've got an interesting book that you've got available. Tell me a little bit about that. Show us what that book's all about.
Yeah, so because I was a high-tech robotics guy and I had no idea, I knew about all the 50 stocks, but nobody ever told me here's the 50 alternative choices. We do two things. One, we do a webinar series every couple weeks where we bring on completely different asset classes each week. Panelists of experts that have been doing these kind of quirky, lesser known strategies that nobody knows about, and like Forex, or investing in the airline industry, or bourbon barrel cask investing, or parking lots, or lots of stuff. It's super fascinating. And we educate. So people should join that if you're like, hey, I don't even know these things exist, or how, and we do a mastery series on that. So jump in there. But I also write about it. I write about my whole journey, and it's called, this is actually called Lessons from Thought Leaders, and I did a chapter in it, and there's a Navy SEAL, there's some really cool people, Brian Tracy, Kevin Easton, Tom Ziegler, Dennis Waitley, some NFL, NBA players. I loved it, had a wonderful time hanging out with these guys. I tell my whole story, that losing it all, ebbs and flows, master's in engineering, and then getting into apartments and energy and all kinds of stuff and legal. If anybody wants one, you can go to our website, Passive Investing Mastery. And we have our deals at the top, our mastery series below. Check those out. But if you go to passiveinvestingmastery.com/book, that's the secret link. You got to put the name of the podcast in there. If you don't tell us where you found us, we're not going to respond. But if you say where and how you found us, name of the podcast, then you can either download the PDF ebook, or you can download PDF ebook, and we'll sign it and ship out a hard copy to you. And I hope that helps to contribute to your journey. And if along that path you want to have a conversation, it's one of the things that I love to do in this world now that I'm full-time in investments, and I get to always have a calendar link open for those that are trying to seek better ways, and something resonated with you today and you're like, yeah, maybe I'll put a slice into something new that doesn't rise and fall with the rest. Maybe that'd feel better. Set up a call, we'll have that conversation. And if we're not the right option, I hosted like 50 different alt investment series as master classes, so we'll probably know one that does resonate with you.
Fantastic. Patrick, thanks very much for being on the show.
Glad to be here, Dave. Thanks so much.
All right, everybody, take care, and we'll see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.